Step 1, determine bias using new day opening gaps or new week opening gaps. So the last 5 prior to today, well, including today, 1, 2, 3, 4, and we are currently inside Monday's new opening gap and the new week opening gap for this week. Well, for the week that I'm currently backtesting. So how do we determine the bias using these things? So ICT says whichever ones are in close proximity to both price and to one another usually act as a draw. And also, if you've got more on one side than the other, then a price is likely, not guaranteed, but likely to be drawn to where they are. And right now, we're currently in the middle of the new week opening gap. And you've got 2 new day opening gaps up here and 2 new day opening gaps down here. So this is backtesting for me. So I personally determine bias using something else, but I find what's being taught on ICT channel right now very intriguing and definitely something that I'd want to add to my toolbox. But I want to test it first, and I've decided to just do it in front of everyone so you may benefit from my backtesting as I do. So from the exact price at 7 o'clock right now, the start of the New York session, we are about 424 points below these and 268 points above these two down here. So for backtesting purposes, I'm gonna use these two as my draw. So we've determined what our bias is using the new day opening gaps. We want to identify equal highs or lows formed after 7 o'clock New York time. So this line demonstrates where 7 o'clock New York time is. And we want to wait for equal highs to form, in today's case, to see those get raided. So we're waiting for a raid opposing to our bias. Our bias is bearish. So if we do get that raid, I have my own personal criteria, obviously taught to me by ICT and through his YouTube channel, but just tools of his that I've kind of put together that have worked for me personally, that I want to use to get in to target these levels over here, okay? So we're going to wait to see if we do form any equal highs first, and then we're going to apply my entry model if those equal highs get raided. So let's zoom in. Okay, so we've got these. I think the one on the right pierced the one on the left just slightly. But still would be classified as relative equal highs. So do we raid those? Not yet. We've formed some more over here. Actually, let me just copy this. We just raided these two. So let's see if we have a willingness to go lower after doing so. Okay, so I'd classify that as a shift. And now I'm waiting to see a lower high get raided and then a candle close below a swing low as entry confirmation, and then I'm waiting for OTE. So we don't close below this. Had we done so, I'd be measuring that price leg with my Fibonacci tool and trying to get in at OTE, but we didn't get it. So now we've rated these. And let's see if we can get to those ones as well. Okay, so close below a swing low. Does it close? Yes, it does. So I'll classify that as a shift. But if you remember from the last video, I said that when all of this is happening, if we've got equal highs as the start of the move, I'm not interested. So I wouldn't want to take this, even if it did give me all my criteria. If it wasn't for this, and this move isn't started off with a swing high, usually when that's the case, these tend to get raided. So let's see if we raid this. We do. Literally wick off the high of the new day opening gap. Let's see what happens. Sorry, the new week opening gap. Let's see what happens next. Okay, so we go slightly higher than that. Okay, still pushing higher. Okay, so we've got our market structure shift. So let me just bring the rules back down here, the rules that I'm applying. Okay, so determine bias using new day opening gaps and new week opening gaps. We've done that. We're bearish. We want to identify equal highs and lows formed after 7 o'clock. This line is 7 o'clock. These are your equal highs. Wait for a raid opposing our bias. So our bias is bearish and opposing bearish is bullish. So we get a bullish raid through these equal highs. And now I'm waiting for my personal entry criteria. I know there's a lot of people who will probably get in off an inversion fair value gap or a breaker or whatnot, and that's completely fine. But personally, I've found success when I've applied these things over here. So I'm waiting for a shift first. Okay, after the shift, I'm waiting for a raid. I don't like this. Okay, so high, low, lower high, lower low, lower high, lower low. So I'm waiting for one of the lower highs to get raided, but I personally do not like this. So even if we do get all that criteria, I probably wouldn't have gotten in this in a live market because of these, right? We want to see these taken out and then we want to trade. And sometimes they won't, and it will just run off without you. And you know what, man? That's okay. Okay, so this lower high here gets taken out. Now I want to see a close below a swing low to confirm. So we get this close below this swing low, but I don't want to take this because I don't like this. This equal highs to me. There might be SMT with ES here, I don't know, but I don't like that one bit. I want to see these get taken out. These are, I mean, this rated this, but still relatively equal, and definitely equal with these over here. That's retail resistance, that is. It might run off. Look, there's always a chance that it could just stay like that for the time being, go into a deep discount, and then come and pump back up. So, I mean, I'm looking at this right now, and as we're cracking through these highs, we're sharply rejecting and closing below swing lows. And every close below a swing low seems to be energetic as opposed to the closes above the swing highs. Look at this. Wicks goes lower. Wicks goes lower. But with this, the body's just cut through. With this, the bodies are just cutting through. So I've got a feeling this is going to be one of those ones where, because of this, I'm not going to get in. But it's most likely going to follow what the bias was. So let's see. At this point in time, had we not had equal highs up here, I would have put a fib on this, looked for an OTE, and then would have tried to sell short. Yeah, it is bearish. It's probably gonna go. It's probably gonna go down here. And I think we've seen enough evidence, based off of this displacement, that even though we've got equal highs here, there's probably SMT with ES. So if we do get an OTE, might as well take it. I mean, we are just backtesting it, isn't a live market. Okay, so we've rated this swing high here, and the bodies of these candles have closed below this. So I'm going to take my fib. Wow. Yeah, this is extremely bearish. Okay, so we've just tapped into OTE, and we've also filled this fair value gap. We've got this breaker up here that is aligned with the low of the new week opening gap. So I don't know, might want to revisit this as well. Let's see. For argument's sake, let's say we drop 0.5% on this, and we want to target a 1 to 3. Let's just do 3.2 or 3.5. Okay, let's just add a couple ticks to the stop. Okay, that should be good enough. So 1 to 3 risk to reward. The target is these down here, the new day opening gaps. I like using the fib extensions to see if they overlap with whatever I believe the draw is. So this looks nice. So does this. This is overlapping with the consequent encroachment of this new day opening gap when we draw the fib with the bodies, and when we do it with the wicks. Standard deviation of 1 is overlapping with this new day opening gap, and this fib extension here is almost perfectly aligned with the midpoint of this new day opening gap. So there's a lot of confluence here, and I'm sure if we were to go into a higher time frame, I bet the bodies are respecting this level. We'll check that in a sec. Let's see if this pans out to begin with. Not bad. I just want to see if it reaches into the new day opening gaps and those fib extensions. So it's reached into the first one. I'm just going to go up a time frame because I want to see if it actually gets there. That's crazy. Nah, this stuff is crazy. Yeah, I don't know how you guys can watch, well, how some of you can watch ICT and not be mesmerized by some of the stuff that this guy teaches. That is ridiculous. Yes, we had equal highs up here and it wasn't perfect. And we may have left or not taken this in a live market, but just seeing how price respects these levels and is drawn to them is insane. Look at the way it taps into it, and then just it's crazy. It's crazy. Look at how the bodies of these candles. If I go into the 1 minute, I noticed this when I got into that position. Look at how. Look at that. Wicks through. The bodies don't close above it, and after that happens, it just fails to do. Look at how it respects it. Look at this. But yeah, that's probably it for session 2. I'll probably upload session 3 tomorrow. And for my current 11 viewers, thank you for watching. And yeah, see you next time.